The year is 2020, it's pandemic. Markets are crashing, fear is everywhere. Most investors are panicking or sitting on the sidelines. But quietly, some promoters are buying their own stocks. Tanla Platforms, in March 2020, promoter holding was around 32.4%. By December, it had moved to over 41%. Let's see what happened afterwards. The stock delivered roughly 1,250% returns over the next year. Then there is Trident Limited. Promoters increased their stake from around 71% to 73% through 2020. Smaller move, but clearly directional. The stock went on to deliver around 147% returns the following year. Now, I'm not telling you all of these stories to get you all excited. I'm telling you these stories because they point to one of the most powerful and also most misunderstood signals in the stock market: promoter buying. There's a saying that captures it perfectly. A promoter has many reasons to sell a stock, but only one reason to buy. Think about it. Selling could be due to anything. They would need cash, they might want to diversify, personal reasons, or tax planning. It doesn't tell you much. But buying is different. When a promoter puts fresh money into their own company, a company they already own, already understand, already have all their wealth tied up in, they are not diversifying, they are doing the opposite. They are concentrating more into something they already have, and that usually happens for only one reason. They think the stock is worth more than what the market is pricing it at. That's why the signal matters, and that's what today's video is about. Hi, I'm Aparna, and we are going to look at 10 stocks where promoters have increased their stake this quarter. We look at the numbers, what the buying might mean, and also understand when the signal can mislead you, because it can. Also watch this video till the end if you want to see how we select these stocks. So let's get right into it. But before we look at the stocks, let's quickly understand who exactly are promoters. These are founders, controlling owners, the people whose financial life is tied to this company. They're not reading the same analyst reports you are reading. They are seeing demand trends before they show up in quarterly results. They know the order pipeline, they understand margin pressure in real time. They see the risks and the opportunities before anyone else does. So when they buy, they are not guessing. But they are also not always right. Please keep that in mind as we go through the list. Also, promoters don't always buy shares directly from the market. They pay a small amount upfront and the rest later. It's a way to increase their stake gradually rather than all at once. It can signal confidence, but it also means they get ownership on favorable terms. So if you see promoter buying through warrants, don't treat it as the same thing as open market buying. It's a slightly different signal worth knowing. This quarter, there's been a noticeable pickup in promoter buying across multiple companies. So let me take you through each one of these 10 businesses. Stock number 1 is Godrej Industries. This is not a simple single business company. It operates across chemicals, real estate, and consumer-related businesses. The chemicals business, especially oleochemicals, is the stable part. That's what keeps cash flow steady. The other businesses like real estate are more cyclical. They don't always perform, but when the cycle turns, they can add up significant upside. So this is a mix of stability plus optional growth. Now let's look at what's happening right now. This quarter, revenue grew about 23% and profitability improved as well, which was helped by better pricing in chemicals and tighter cost control. So the base business is already doing fine. Now comes the important part. Promoters increased their stake by around 3.3%, and this is not a small number. In fact, it's the largest increase on this entire list. So what does that tell you? When a company has multiple businesses and those businesses are starting to align at the same time and insiders are increasing their stake this meaningfully, it usually signals one thing. They believe the current price is not fully reflecting what's coming next. Now let's move on to stock number 2 on our list, Adani Ports and SEZ. Adani Ports is not just a port company anymore. It's building a full logistics chain from port to final delivery. So as trade grows, this entire system becomes more valuable. Now let's look at the numbers. Revenue grew 22% year-on-year to 9,705 crore. EBITDA grew 20% to 5,786 crore. And marine revenue almost doubled. So the business is already showing strong momentum. Now here's the interesting part. Promoters increased their stake by around 2.1%, which shows they are confident this growth is not short-term. Now let's move on to stock number 3, which is PCBL. Now this one is an interesting transition story. PCBL operates in carbon black, which is used in tires, plastics, and now increasingly in batteries. So the business is moving from a traditional product to more specialized, higher value products. Let's look at the numbers. Q3 revenue stood at 1,846 crore, while EBITDA came in at 231 crore. Margins are under pressure right now, but here's what's important. Specialty volumes grew 17% year on year. That's the future part of the business. And during this phase, promoters increased their stake by around 1.97%. So what they might be seeing? Short-term margins may look weak, but the direction of the business is improving. Now let's move on to stock number 4 on our list, JB Chemicals. They operate in branded medicines with a strong presence in chronic therapies and international markets. As healthcare demand becomes more consistent, this kind of portfolio tends to compound steadily. Now let's look at the numbers. Q3 revenue grew 11% to 1,065 crore and profit grew 22% to 198 crore. So margins are improving. Now promoters have increased their stake by about 1.22%. This is not aggressive buying, but it's consistent. And in businesses like pharma, consistency matters more than spikes. This likely reflects confidence in domestic growth, international expansion, and their contract manufacturing business. With that, let's move to stock number 5 on our list, JK Tyre. It operates across passenger vehicles, commercial vehicles, and specialty tires. The key driver here is margin improvement. Revenue grew 15% to 4,235 crore. EBITDA jumped to 583 crore and margins improved to 13.8%. Now, promoters increased their stake by about 1.17%. This comes at a time when the product mix is improving, premium tires are increasing, and EV tire opportunities opening up. So again, it doesn't look like a random buy, it's coming with improving profitability. Let's move on to stock number 6, Himadri Specialty Chemical. This is a very interesting one. Himadri operates in carbon materials and specialty chemicals. But more importantly, it's moving into battery materials, which is a move up in the value chain into high-margin, future-facing segments. Let's look at the numbers. Q3 EBITDA grew 12% year-on-year, while PAT jumped 37%, which was driven mainly by better product mix and operating leverage. Now, promoters increased their stake to 52.5%, which was up 0.93%. But this was not just open market buying. It came through capital infusion. That's important because it means fresh money coming into the business. It reflects conviction in expansion into battery materials, specialty carbon black, and global markets. But execution will decide how this plays out. Now let's move on to the next one on our list, which is stock number 7, Maharashtra Seamless. They make pipes used in oil and gas and infrastructure and industrial sectors where product quality and approvals directly impact demand. So as energy capex cycles evolve, this positioning becomes important. Q3 revenue came in at 1,290 crore with PAT at 247 crore, showing recovery from the previous quarter while margins improved to 23%. Now here's what stands out. Promoter holding moved up to 69.81%, a steady increase over recent quarters. And the company is sitting on 3,400 crores of cash. Plus, the future capex is being funded internally. So what does this tell you? Strong balance sheet plus improving cycle remains a key variable. Now let's look at stock number 8, Saregama India. This is a completely different kind of business. Saregama operates as an entertainment IP company, monetizing music, content, and artists across digital platforms, films, and live events. And in today's world, content ownership is powerful. The business continues to scale steadily. Q3 revenue came in at 2,604 million with PAT at 512 million, which was supported by strong growth in music licensing and artist management. Here's the part that deserves a closer look. Promoter holding increased by around 0.74%. That comes as the company is aggressively investing in content IP and building long-term monetization streams. It reflects confidence in compounding through content ownership, though execution remains key here too. Now let's move on to stock number 9, eClerx Services Limited. It helps global companies manage their data and operations better across sectors like finance, retail, and tech. The business continues to scale with consistency. Q3 revenue stood at 11,017 million, while net profit came in at 1,920 million, with margins holding near 17%. Promoter holding here increased by around 0.7%. That comes alongside strong deal wins and expanding presence in high-value analytics and automation-led services. It reflects confidence in steady growth visibility even in a competitive outsourcing environment. And here's the last one on the list, Lloyds Metals. It's building a fully integrated business from mining iron ore to making pellets and steel. This matters because when a company controls its own raw materials, it can manage costs better and scale more easily, especially in a commodity business. Q3 numbers reflect that shift. Revenue came in at 38,750 million and PAT at 8,885 million, both more than doubling year on year. Now, promoters have increased their stake by 0.59%. That likely reflects confidence in captive mines valid till 2057, logistics advantages like slurry pipelines, and visible move towards value-added products. Execution here also remains the key, but the direction looks structurally stronger. Now, if you step back and look at all these companies together, one pattern starts to emerge. Promoter buying usually happens when there is a gap between what the market is seeing today and what insiders believe the business can become. But this is also where most investors make a mistake. They see promoter buying and immediately assume the stock will go up. That's not always true. Let me give you a couple of quick examples. Motilal Oswal Financial Services. In 2020, promoters increased their stake from around 69.7% to 70.4%. Looks like strong conviction, right? But the stock went on to give negative 18% returns over the next year. Same with PSP projects. Promoters increased their stake slightly from around 73.8% to 74.1%. But the stock delivered around minus 2.6% returns. So what happened here? Sometimes promoters believe the business is undervalued, but the market is factoring in risks that are not yet visible. Sometimes the recovery just takes longer than expected, and sometimes the business itself faces deeper challenges, which is why this is the most important line in the entire video. Promoter buying shows confidence. It does not guarantee correctness. And if you ignore this, you end up following signals without understanding the story. So what should you do as an investor? Don't just track where promoters are buying. Try to understand why they are buying. Is the business improving? Is there a turnaround coming? Is the market overreacting, or are there risks you're not seeing yet? Because the real edge is not in the signal, it's in how you interpret it. Now let me tell you, how did we select these stocks? So the data has been sourced from Trendline, focusing on companies where promoters have increased their stake in the latest quarter. Only meaningful changes in shareholding have been considered. Minor or insignificant changes have been ignored. The idea is to filter out noise and focus only on cases where promoter action is large enough to matter. Also, this is not a recommendation list. It's a starting point for further analysis. If this helped you understand promoter buying in a much clearer way, hit like. And tell me in the comments which stock from this list do you want us to break down in detail next. If you like this format, let us know. We'll keep tracking this every quarter. Subscribe for more such simple investor-first breakdowns. I'll see you in the next one.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.